think it's money or not, or just industrial, there's an 85% correlation between gold and silver. So if gold goes up, silver goes up 85% of the time. If gold goes down, silver goes down 85%.
David, let me ask you this. We often hear, well, look at the run up in gold, and when gold keeps this momentum, silver will follow suit, right? We always hear this kind of reasoning, but why would it when the fundamentals are completely different between silver and gold?
Well, I would say it differently, Danielle. I think the fundamentals for silver and gold are somewhat similar. I mean, I consider them both monetary metals, others don't. And the advantage for silver is the industrial demand doesn't go away, and that's 60% of the market. So you have a dynamic in gold where if it runs up high, then the subset is, well, what else can I get that provides what gold does? And that's, real money. It's tangible, it's fungible, it's divisible, and it's recognizable, and people have coveted it for 1,000 years. So I'd say, yeah, it follows gold because it's gold's little brother, it really is. I mean, I love to say silver is superior to gold. In my view, in some ways it is, but as far as the markets are concerned, gold is money. That's a given. This establishment knows that gold is money. Even Bernanke, when he was asked by Dr. Ron Paul if gold was money, and he had to fumble around and say, no, it's tradition, he knew damn well it was money. Silver, it's been pushed to the side. It's an industrial metal, but it acts as money at times, and in my view is, because of the properties that it holds next to gold. So I think there is, here's the fact, whether you think it's money or not, or just industrial, there's an 85% correlation between gold and silver. So if gold goes up, silver goes up 85% of the time. If gold goes down, silver goes down 85%.
Fair enough. David, so for investors watching, what is one to do? I guess from what I'm hearing, if you already own a good amount of silver stash, maybe are you suggesting you wait it out? And if maybe you're new to the game, you want to start adding to your portfolio, what is one to do here?
Great question, and tough to answer. I would say if you are not exposed to the metals, you probably could start with silver, because the ratio is still pretty high, gold-silver ratio, and get in and just start to accumulate. I think that's the best thing. If you've already, loaded up on your metals, even if it was at, $30 silver, I'd say we're still going much higher for the next few years. Just hold what you have. I mean, a lot of people don't balance their portfolio properly, in my view, because a lot that get the gold story see it as like that's the only thing left standing. And I think we're going to be in that direction momentarily. I mean, meaning that these pension funds that move into gold, these retirement funds, the general stock market falls off heavily. There'll be a run to gold, I think, that's never been witnessed before. I truly believe that. But if you look at it from the 30,000 foot level, and you look at it, let's say from a chart perspective, you're going to see this huge inflow into the precious metals, like what happened in 1980. But it's an event that takes place that's very short-lived, because the monetary authorities on a global basis are already designing the next monetary system. And in my view, it's going to be a cashless system that's based on the blockchain, where everything is traced, tracked, and taxed, and there's no way out of it. So that's the system. Now, whether gold will be connected to that system or not remains to be determined. I can almost guarantee that silver won't in an official way, but as you know, way back when you were, I think, the first to interview me on the Load Project, there are systems like that are blockchain based, that do adhere to a precious metal such as silver, and other things that are, hard commodities on the blockchain. So very interesting times. I believe in competing currencies. They do exist, and they will continue to exist. And it's going to be very interesting to see how the monetary authorities integrate their blockchains with those that already exist, and how that melding will go about, and what the, let's say, jurisdictional mandates will be.
David, last question for you. Physical silver or silver miners or silver ETFs?
Right now, silver. XAU and the HUI have barely outperformed the metals themselves this year. So it's a lot safer to own the metal than to own a miner. In the longer run, when let's say the physical market gets extremely tight, and I believe it will, even on the silver side. In other words, commercial bars, you just can't get it. I mean, it's just the price keeps going up. Then there'll be a run into the next best thing will be the miners. And then of course the larger money and some of the retail investors will move into the ETFs, because you can move into the ETF with substantial amounts and they'll move, but not like you would in a small stock. So you'll see a lot in all three areas. It just will be first, second, and third. I think it'll be first metal, second miners, and third ETFs.
Good. David Morgan, so actually one last thought. When you're talking your forecast and your bullish silver, will it blast through its previous high of close to $50 an ounce?
Yeah, you know, I've studied the markets my whole life, and normally a ceiling, or what they call resistance level, usually needs to be penetrated 3 times as a minimum. This would be our third attempt to go through the $50 nominal. It's just a number, 50. 50 in 1980 was worth a lot more than $50 in 2011. But regardless of that, chart-wise, yeah, we'll get through 50 this time. And you know, I said in 2003 or 4, 100 was my target.
Right.
And I think it could go beyond that. But you know, you look kind of foolish until you get through 50. We'll see.